Well, good evening, all. I'm Epstein, and here we are with your metal market wrap-up. And this wrap-up is for the evening of Wednesday, and we're at now the 20th of December, 2023, 5:45 p.m. Central Time. I am going to play hooky tomorrow. I'm not going anywhere. Just going to take the day off for myself from putting out these evening updates. For my subscribers, you'll still get your regular updates from me during the day, in the first thing in the morning, and of course my written updates. But just a break, and then I will be back with you on Friday, and I'll put out the weekly updates for you. But the trade is getting ultra thin. I didn't even know how to report this morning because we started the day off in a down day in stock indices. They rallied back the rest of the day as traders did the same old thing. They bought the break saying you're never going to stay down. But late in the day, they did sell off finally. And now you're losing momentum to the upside. So that's why I'm going to be able to take a day off. I feel that the market's about to give you something of a correction right here. We'll take a look and pay attention. But this update is all about the metal markets. So let's talk about them. In the gold, you're still stuck in the 20-40 area. The gold-silver ratio is now flipping in favor of the silver. I'll show you that in a minute. Will it stay flipped is the question. The dollar got as low and under the 102 area, got as low as 101.78.5 before getting a little bit of a correction. Nothing big of a surprise. It's important that you understand what's going on with the bonds and notes. Where do you think you ended 2022, the end of the year last year, in the 10-year note? Is the market sharply higher? Lower than that? Sharply lower? I don't think, but lower than that? Where are we? Because we have another, 11 days left, and that's it. What if I tell you unchanged? With all that has gone on, you were about 3.88% in the 10-year note at the end of 2022. We then got all this craziness. Then we went up to 5%, as you know. Traders were placing big bets. We're going to go to 6% or greater in this interest rate. We have now come roaring or collapsing, how's that for the better word, back to 388. I was looking at it today going, what a round trip, and who's got that thing right? Very few people. We saw the pros betting every which way during the year. And if you bet on it at the beginning of the year and you're ending here, you probably didn't get it right. How many people would have said it's going to be about unchanged? I doubt many. But that's about where you're at. Energy prices down a little bit here. This is a pretty big size failure in crude. In the nat gas. Can't even get up to give us a gain. And you know why? Because a huge swath of the United States is just warmer than normal. We're 42 in Chicago. We're going to be 51 for Christmas. We were 14 degrees a year ago for Christmas time. Now we're going to be 51. So that just gives you an idea of the warmth that is going on. When we take a look at the gold market, you are still over the 18-week average, so the bias is still to the upside. When we look at the action right here, it doesn't get much more neutral than this. You had a huge decline, you washed out further, you've come back near about half of that, probably 40% bounce or so, and that's about where you're stuck. The trend is up, you do have higher lows and higher highs, okay? The 18-day average is right where you're fighting. How often do you hear me tell you? That's the line in the sand, and from there, markets make decisions as to what they want to do. You go totally, T-O-T-T-A-L-Y, I said it weird, totally neutral. If the market takes out that break low over there, that would give you a higher high and a lower low, and you have an attempt at momentum trying to turn up a little bit. Now, the gold-silver, we're back to silver color because the market is under the 18-day average of closes. And when that occurs, what takes place from my perspective is when that occurs, the numbers get smaller as long as you stay. It means that in a perfect world, no commission, no part. You'd need, for example, 83.82 ounces or 83.55 right now. That's the 18-day average. 83.55 ounces of silver to get 1 ounce of gold. Then 82, 80, got it, which means silver be gaining in value. When I look at the silver market, what I don't want to see in silver is the market take out the 23.95.5 area. Barring that, if the market wants to run and stay in an uptrend, the potential's there for the $26 area. In the copper market, backing away from hitting the upper Bollinger Band, we've heard a number of major world copper miners, the heads of the company, saying we're going to have a shortfall in copper next year. So pay attention to that. They're giving you the warning as to where they're at. In the platinum market, the first challenge of, see the gray line up right here? The 200-day average and the upper Bollinger Band, proving to be an awful lot for the market to get through, plus it's overbought. I think the pros took their money off the table and they said, I'm running away. In the dollar index, you're oversold. You can get a bounce here. Wouldn't surprise me at all. Should the market clear the 102.28 level, you could get all the way back up towards the 102.70s before you run into the next resistance. If the market takes out not today's low of Wednesday, but Tuesday's low, then I think you're in lockup from my perspective, at least as a chartist, getting back into the 101.40 area. So I'll be watching that. Now, you see all these different parts that I'm putting out the chart, the slow stochastics. I know a lot of you write me and you have the other charting services. One of the popular ones that out there is TradingView. So we wrote a suite for it. And all you have to do to get it to work on yours, you go to our website, iraepstein.com. And at iraepstein.com, what you do is you go up to the top right, client resources, give it a click, you'll see TradingView. Sign up for it right there. We'll get a notice, and during business hours, not the evening hours, we'll go in and turn it on, then you log out and back in, and kaboom, you got everything. It'll give you outside days. I'm going to highlight those. You're going to get my swing lines, my version of slow stochastics. It all ties together with my courses. My different moving averages will all be on here. And you can get the values by just going to our website and looking at what we've got through there if you want to get all these. How do you work with this? Well, again, iraepstein.com, client resources, away you go, or you can move your cursor up here. That's another way for you to do it. In the meantime, I'm Ira Epstein. You have yourself a great evening. I'll catch up with you Friday. Hooky day, my day. I'll talk to you all. Take care.